you want to take the temperature of the technology industry, I always say you should find out what's happening at Avnet, AVT, a company I often describe as the largest supermarket of tech on earth. They're also the #1 distributor of electronic components, including semiconductors, as well as being among the largest suppliers of information technology, hardware, software, and services around the globe. So it matters that when Avnet reported this morning, the company posted a 3-cent earnings miss off a $1.25 basis with substantially weaker than expected revenues that declined by 9% year over year. And even on a constant currency basis, that number would have been down 5.1%. Maybe that suggests maybe there's more weakness coming from the super freaking dollar, or perhaps something else. Hence why the stock sank 53 cents or 1.35% today. Why does all this, what does it mean? What does it mean for Avnet? What does it mean for the whole tech sector? Let's check in with Rick Amata, learn more about the quarter and where the company's headed. Mr. Amata, welcome back to Mad Money.
Thank you, Jim. Great to be back.
Great. Rick, this was a tough quarter. This is by your own admission. I don't put words in your mouth. You basically, in the conference call and in your statements, just said things didn't go as planned. Why is that?
Hey, Jim, a miss is a miss, but we show up rain or shine, by the way.
Do.
The 3-cent miss, remember, was in contrast to that sales miss that you talked about. It really was a revenue problem for us overall. We were very proud of the team that despite that revenue miss, we still expanded gross and operating margins, and the cost controls were really, really good. Cash flow was good as well. So there were some silver linings in there, but hey, a miss is a miss.
All right, but let's go over the silver linings. I mean, to me, the bright spots here, automotive and aerospace, and I mention these because some people were worried after what Boeing said that aerospace is slowing down, and some people are concerned that even though Ford put out a great number, their stock went down. So is this going to continue in those two important industries?
Well, for us, Jim, when it came to where the dislocation was, it really was concentrated in the Americas, and it showed up in both our businesses, both in the components and the computer side. And in our components business, we felt there was a more general slowdown in the broader industrial space. By the way, the same type of indicators we think were mirrored in a PMI that went down in November and down in December in the U.S. So we felt we were pretty much tracking with that overall. On the computer side of our business, it was more about a disappointing quarter end and some shrinkage in our storage system space as there's a transition going on there between some of the legacy technologies and some of the new up-and-coming third platform technologies.
Well, now, I know you can't really speak to this current quarter, but is there any chance that maybe the market strengthened a little bit in January? You gave us a hint that that could be the case in the call.
Yeah, we did refer to the first 3 weeks of January. We had a nicely positive book-to-bill trend going. That's a good thing rather than a bad thing. We were 0.98 for Q2. We don't want to overplay that, but it's certainly better to see a positive book-to-bill early in the quarter rather than negative to get started.
Rick, I'm a huge believer in the Internet of Things and how there's just going to be more connections, more devices, that just over time everything's getting obviously more digitized. Right. Is it just a hiccup that you're seeing this? Because, or maybe this is not the greatest trend that I know I've been playing up on Mad Money for a long time.
So, Jim, there are multiple transitions in play, and I think you've had some previous guests that have talked about the necessity to invest into these transitions. And we believe the Internet of Things, we believe embedded solution space, and we believe this transfer in enterprise IT to third platform technologies are all critically important to our future. So all seasons, we are finding ways to invest. And remember now, even with the shortfall in revenues, we were able to find ways to expand that gross and operating margin. Can you imagine if we get growth back and we still maintain that disciplined cost control? We think that's a powerful combination, always trying to get ready for the next upcycle.
And you keep buying back stocks, so when it does happen, there'll be some nice leverage to the earnings.
That's right. That's right. We've been very disciplined about this, Jim. I think we talk about it each and every quarter. And with the pullback, I think one of the reasons there was a more muted response to the equity today is we're down 7% since January 1st, just based on the general market malaise that's happened overall. And we've been making sure that we're taking the opportunity during this pullback to invest more aggressively in our own equity.
Well, one last question, Rick. I mean, 2 years ago when we were talking, and 3 years ago, 4 years ago, we always talked about how Europe was bad, but the United States saved things. It does seem that it's kind of reversed this quarter.
Jim, this is a trend we have talked about the last few quarters. Our EMEA business in local currency continues to have positive organic growth year on year. And not only led by our components team, which has a sustained track record of performance over 10 quarters now, we've also got the recovery story in our computer business that's 4 quarters strong and growing. And I still believe that there's a little bit of underestimation as to how strong the overall underlying European industrial economy is.
Well, it's been a great buy every time it's gotten hit like this. Rick Hamada, CEO of Avnet, thank you so much for coming on the show, sir.
Thank you, Jim.
All right, good, steady business. Obviously, I believe just nothing but a short-term hiccup. You heard that January's getting better. Maybe that's the key piece of information we needed. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.